on this computer. Did you guys hear recording in progress?
Nah, I had the thing pop up that says this meeting's being recorded though.
Oh, okay.
Yeah,
Okay,
I have the
cool.
same thing.
Oh, awesome. Okay, so we will get started. Thank you for joining us, Terry. Um,
Glad to be here.
yes, so just to introduce Michelle, and this is for our recording, but Michelle is the owner of Mitchell Consulting. She started this business over 10 years ago. Oh, we have another person coming. Hi, Timothy. I was connecting to audio. Hi, Timothy. Okay. So Michelle is the owner of Mitchell Consulting. She started the business over 10 years ago, and we just love to help owners understand their numbers more and make really good decisions based on them. Mitchell Consulting is here to help businesses with our financial expertise. And so Michelle started this, and we have an awesome team of professionals, including myself and Eric, who are on this call today. And we also, our fearless leader is enjoying his honeymoon, but Evan is our supervisor, and then Eric is our bookkeeper, and I'm the business advisor. So that is our team here at Mitchell Consulting. We love to do these empowerment roundtables just to bring some great information to our clients and future clients. And so today, let's just get into the topic. We are talking about cash flow. So I'm going to kick it over to Eric, and he is going to get into some things on cash flow. And if you have any questions, Terry and Timothy, feel free to just raise your hand and ask them, or unmute yourself and ask the question, but we're going to get into
Yeah,
it.
you can just interrupt me. Don't worry. I'm just gonna go over like the basics of cash flow. So if you get lost or confused or need me to repeat something, don't hesitate. And if I'm looking down, it's just because the cat's in my lap and now he runs away. So no more cat in the lap. Anyways, basically like what is cash flow? Um, it's just the money coming in and out of the business. It's like the difference between what you make and what you spend, which we think is just profit, but there's like it's instead of explaining it, it's gonna be easier just to give an example. So like say you sell $15,000 worth of stuff, you spend 5K on expenses for that stuff. So you have like 10K profit and 10K cash flow. So right there, they're even. But then now let's say you spent 8 grand to pay back a loan. So now you still have 10 grand profit, but only 2 grand in cash flow. Or like if you took that 10K and used it to buy a bunch of new inventory for the next month or for the next summer or whatever, like so now you have no money, but you still have that 10 grand profit. That's why like when people think of, like, oh my, I have so many great sales, but I have no money. It's really just because you're spending that money on something else, business related, but it's not going against your profit. It's going to pay back a loan, buy equipment, buy inventory, things that aren't going to show up in your profit and loss statement.
Right.
So
Yeah.
one of the things that we try and tell people, and it's not just us, like everyone does, is for a business to always have like an emergency fund. And something say that can be like 10% of your annual revenue or like at least 3 months of all your expenses just set aside just in case you don't sell anything the next month. You still have the cash flow available to be able to keep your business running. And you think that sounds crazy, just we did have COVID, but a more realistic example instead of COVID and confinement would be more like you own a store, like we one of our clients owns a salon. So if she's not good with her cash flow, all of a sudden one day the heater breaks or the AC breaks. That's like a perfect example of why you want to be on top of having cash ready to spend instead of having to take out more debt or more loans to do that. And just to give you like what are like some signs of having poor cash flow. One is, Lauren just mentioned this before we started the call, is like having consistently low bank balances despite having a great profit. So it's like you look at your P&L and you're like, oh wow, I made 20 grand last month. How come I only have 1 grand in my bank account? Like this just doesn't make sense. Difficulty paying bills on time, over reliance on credit cards or loans or things of that. Having an excessively high inventory. One I did like, which I was reading about earlier, was like not having the ability to capitalize on an opportunity. So, for example, even though your business is very successful, you can't expand because you don't have the money, or your supplier's offering a deal in bulk, but you can't afford to actually buy the bulk and get the savings. It's like, I always use that analogy when I talk to about how like when you're poor, you're trapped being poor because you can only buy things in like single use. You can never buy like 50 rolls of paper towels to cut down the price. It's like that's a whole different conversation.
Yeah.
Anyways, it's just like
Oh,
it.
Terry, sorry. Terry, did you
Oh,
have a
sorry.
question? Your hand was raised. Oh,
Oh,
okay.
sorry.
Yes.
Oh, that's just it. Just
Yeah.
like interrupt me because I have a cat distraction. So please, just it's more auditory for me than like the little box.
All right, then I'll just yell or something. So
Yeah.
the minute you were talking cash flow. So
Yes.
money in, money out to pay for stuff you got to pay for because your business requires it.
Yeah.
And what's left over is profit.
Well, at that
No,
point,
is cash flow.
exactly. It's just the amount of cash, the cash flow.
Okay. And then you said something about the P&L sheet. It's like, okay, you just lost me.
Okay.
I should say, for Timothy's benefit, if no one else's, I am so new at this and so green. It's just pathetic. I don't know why I'm doing it, but I think I am.
Oh no, no.
I mean,
I was
go-
just gonna say, like, no, I was just trying to highlight the difference between profit and cash flow because
Please.
a lot of people think it's just the same thing. So and they kind of are in a way until you start spending the money. Like, so if you were to track profit and cash flow at the end of the month, you're like, all right, I made 20 grand and everything, I brought in 20 grand and it cost me 10 grand. So I have 10 grand profit. At that point, it's still the same. Profit and cash flow are both the same. But then when you start spending money on things that are separate from the actual item you're selling, as I said, like buying a new heater, buying a truck to deliver your goods, paying back a loan, those are things that aren't going to eat away. Like your profit will stay the same, but it's using up your cash. Do you
yeah.
understand?
So it's like the
Hey, look.
P&L is the income statement, and then you have your balance sheet, and then you have like your statement of cash flows. And so the expenses that Eric is mentioning, like some of those assets that you buy for your business are going to really, they're going to be on your balance sheet. Like when you're paying back a loan, it's going to be on your balance sheet. So a lot of times as an owner, we focus on our profit and loss statement where we see our revenue, we see our expenses, and then we see our profit. But a lot of times, expenses from your business or money spent through your business isn't always going to hit that one statement. And so when you're looking at that statement, it's confusing because you're like, I look super profitable, but then my bank account is really, really low. And it's because you're paying for things that aren't on that statement. And so when you're reading it, it's misleading. And as an owner, we need to understand that we need to look at more than just that. We need to really have an understanding of the inflows and outflows of actual cash, not the way that it's presented on the statements. So that's why cash flow can be so tricky because, if you, like Eric's example, if I'm selling $15,000 of things, that looks really good. But then you're like, well, where's all my money? I think we've kind of had similar conversations with clients where they're just like, I don't know where my money is. Like I'm making a good amount of sales. I have people interested in what I'm selling. I'm doing a great job. Where's my cash? And that's where cash flow management and understanding the inflows and outflows of cash in your business is going to help you. That's why it's different from just saying, okay, look at your profit loss statement, which is where a lot of people go at first. So that's why we are having this conversation about, okay, how do we get a handle over the cash? Because it's not as clear all the time. So that's kind of how Eric was describing. Does that make a little bit more sense, Terry?
A little bit. I mean, the only thing, well, I'll save my questions because Eric probably has more to say and I can ask those questions at the end.
Oh no, but before we move on to something else regarding cat, like let's just focus on this now. So
Yeah,
don't
yeah,
please
you can
ask.
ask your question.
All right. Well, I mean, the thing that has started to make this make sense to me is the Relay bank account because it puts what, I mean, I have money that comes in and it goes different places.
Mhm.
And the only way I've been able to figure out if I'm, I mean, right now I know I'm drowning. I'm putting way more money out of my investment accounts and so forth into this business than I'm taking out. That's just the reality of being new, I guess. But I have a bucket that is profit. That's a certain percentage. And I have other buckets in there as well, including taxes and so forth. So like if I've got taxes to pay,
Mhm.
that is after cash flow or before cash flow?
So if you have taxes to pay, that is going to be based on your net profit. So the taxes are going to be based on your net profit. But and we're going to touch on this a little bit later. I think what you're referring to is when what we like to teach our clients, including you, is when you get paid, the goal is to put aside a certain percentage of your revenue away for taxes so that
Right.
you are not in the situation where you don't have enough to cover that. And that is a part of profit first or small plate accounting, which we'll touch on. So we'll actually answer that question in a few. So I'm gonna let Eric kind of get through more of what he was saying, and then we'll touch exactly on that thing.
So,
Because you're getting ahead of us, Terry. So you're already
oh,
advanced.
sorry. Okay.
You already
Wait.
know part of what you're talking about.
Yeah, but just to quickly give you the preview is like you're talking like when you have the money come in and you divide it in between all the different accounts you have, like this is the tax savings, this is owner's pay, things like that. Think about it like the cash flow is once once you divide all that money then out, what's left over, think of that as your cash flow. That's how much money you made of the profit. Like she'll get into it, but just think of it like that. So once you divide everything out and then what's left. Before that is profit. Anyways, I guess if I was just going to talk about like basic steps to improve cash flow, but if we don't have a firm grasp of what cash flow is, maybe I should come back to that later, Lauren.
Um, no, I think we can say that toward the end.
Okay.
We'll save that for the end, and we'll kind of get more into just getting another friend, getting a handle over it, right? So, like Eric was saying, to understand your cash flow, you really need to have a grasp past your income statement. Okay, so your income statement gives you great information, but you really want to see the in and out of your cash. So these are some things that will help you to make sure that your numbers are accurate, so that you can use it. Now, there's also something called a statement of cash flows, and it's going to show you cash activity that is happening in your business from three different activity, different types of flows of money, right? So the first is going to be like your operating. So you'll be able to see that in your statement of cash flows, money from operations. Then you'll see one that's related to finances, and then you'll see one that's related to investments. And again, these are the things that you may not see on your income statement. So that's why we don't want you to solely rely on that one statement to make your decisions, because you're not going to have a grasp on where your money really is. So Terry mentioned paying herself as an owner's draw. When you pay yourself as an owner's draw, you're not going to see that on your income statement. That is something that is going to be on your balance sheet within equity. Now, that's a little bit more of a accounting term. And so if you're not into the numbers in accounting, that may not be something that's obvious to you. And so then when you look at your money, you're like, where's the money from my business? Well, you did pay yourself an owner's draw. So that cash out is something that you need to be aware of, because as you're paying your bills, and as your regular operating expenses are coming out of your business, if you're using that one statement by itself, your income statement, you are going to find yourself in a bit of a rut, because you're gonna, the cash isn't gonna be there, right? Even though it seems like you have a ton of money left over from your profit. So making sure these things are gonna help you make sure that your numbers are accurate and complete in your accounting system, so that you can keep a better eye on your cash, right? So as owners, we know, and we're pulling money from here to pay here. We're robbing Peter to pay Paul. We're taking money out of our personal accounts to pay certain business expenses. And sometimes that's just a normal thing that happens. But what I want you to do is transfer money from your personal account into your business account as an owner's investment, so that you can then track that money in your business accounting system. When you are paying for bills on your personal account, or even paying for personal things through your business account, it's really creating muddy waters and making it less of a clear picture of where your cash is. So that's the first thing. Keep your business and your personal separate. If you need to pay for your business expenses with personal money, just transfer it into your business as an investment. And that will make sure that your money is being captured in your business accounting system, and you'll be able to see what's going on. Also, you want to make sure that if you don't already have an accountant working for you, that you are verifying your monthly records with a third party. So what that means is you want to do bank reconciliations to make sure that everything is included. When I look at the bank for my business account, if there are things that are happening in my business that are not on the bank statement, that means that there's money coming in and out from another account, right? That means that there are things that either I'm getting tongue tied. There are things that are either in my account that aren't on the bank, or things on the bank and I can't find in my account. Something is off, something is wonky, and we need to make sure that everything is there and everything is included. And when you do business and personal together, that's where things can get muddy. So you want to make sure you're using one account or all your business accounts, keep it there, and then tie to your third party. So it's also a way to find fraud, and make sure that things aren't taken out of your account that you are not approving. Okay. So Eric, now you said you had a couple of tips on how to improve your cash flow.
Yeah, before I get to that though, I just wanted to speaking of using personal money for using the business accounts for personal, we have someone who basically they made the first 6 months, they made a lot of money, and they say they made 50 grand and they're negative 3,500 for the first 6 months because of using it for personal money, from where they started at the year. So that's what I mean, the confusion of the two. If you just look at the one statement, you're like, oh, everything is going great. But it's really because you're using the business card as your personal card the whole time. And that's not going to show up on your profit and loss statement. So it's very deceptive.
It is
Anyways,
deceptive.
Just to do some basic tips to improve your cash flow. One is invoicing. If you're a business where you're invoicing customers, just make sure you send it as soon as possible. Make sure they're paying it when you're expected to receive it. If you're really concerned about not getting paid fast enough, for example, say you sell $1,000 worth of goods, and they're like, all right, we'll pay you within 30 days, but you need the money sooner to actually pay a bill. You can offer discounts for paying sooner. Some companies offer that. Regularly review your expenses each month. Just look to see what can be cut out, and I actually just happened to me this morning when I got an email for a once a year yearly subscription to something on PayPal, which I had no idea I've been paying for the past 3 years because it was just like it was like $30 every year, and I can't even log into it anymore. So it's a disaster. But it's stuff like that. Like, just look at your expenses, see what you can cut out, what you're not using, and I guarantee there's gonna be something there that you didn't realize you had. Um, and then like the last is really just like inventory management, which I don't know if that applies to you guys, but like try not to overstock. Like there's this whole economic inventory theory of just-in-time management, which isn't going to apply to anyone here. But it's like the idea is just you make it just as you need it. Like theoretically, everything arrives just in time as it's needed. So like if you have an inventory, actually track it and like record what you're doing, what you're selling, what's not selling, what's the highest margin, and just try to keep your inventory as most ideal as possible. Like you don't want to be in a situation where it's July 30th and you have like 100 winter coats you're trying to sell. Like something screwed up. Or
Right.
it's really just so many of these things just come back to like taking the time to look at everything and just record everything, understand it. Even if you don't like understand the higher level concepts, just being like, all right, this money came in, this money went out, where did it go? You don't want to be in a situation where you're just, I made this money, I don't know where it went, whatever, I'll figure that out next month. Because then that never works. And Lauren does a lot of oh God, I can't think of the word, where you talk to people one-on-one.
Oh, advisory.
Advisory. I was gonna say consulting, but I'm like, that doesn't sound right. Um, but yeah, I guarantee you, Lauren, a lot of the time it's someone who's just like, I don't know how much money I spend on this. I don't know where this money's going. I don't know what.
It's true.
It's always just record, track, take your time.
That's true. That's so true. A lot of people don't know where their money is going. And it's not even like they're not responsible people. It really is just like we put stuff on auto pay, we put stuff, we subscribe for something that we need in the moment and we forget about it. I mean, it happens to the best of us. But something that can also help you manage your cash flow, which you want to get back into Profit First, which Terry brought up earlier, thank you so much, is we want to talk about small plate accounting. So small plate accounting is kind of the same as Profit First, which is a book by Mike Michalowicz. So if you want to get that book, it's a great book. We should be getting money for this because we bring up that book all the time. But Profit First is so dope because it really tries to simplify the management of your cash in a way to make it very accessible to everyone. And so these percentages on the screen are showing you every time you get paid. Ideally, we would love for you to split your money at this target percentage, right? But what you need to do for Profit First is assess where you are. So we know that we may be paying more than 30% of our revenue on operational expenses because we may have created habits that our business costs more than that. We know that we may not be taking home 50% of our revenue as business owners because we're giving all the money back to the business to keep things running, right? Because we don't always have a handle on the cash. So a way to get a handle of your cash is to create these target percentages so that you are keeping your business expenses under 30% of the money you're bringing in. And that kind of goes into what Eric was talking about earlier. Are you taking a look at what you're spending every month? Do you know what's coming out automatically of your account? And when you do an audit of your expenses and the different things you pay for, are you really able to stay under some of these Profit First percentages? Are you actually paying yourself 50% of what you make? Right? When you think about what you actually need to take home, can these target percentages meet your needs? based on the money that you're bringing into your business. So using Profit First and really kind of setting the goals that the book has laid out that we're showing on the screen can help you to not only pay yourself, but manage your operating expenses so that you're not overspending, put money aside for taxes, and have a little bit of money your profit money in that account. It's kind of the emergency savings that Eric was mentioning earlier. So we really like to use the small plan accounting model to help you to keep things under control, right? Because like we said earlier, using your income statement by itself can really get you into some hot water. So you need to know what your cash is doing for real, okay? Additionally, this will help you to find money leaks in your business. So when your numbers are accurate from the information we gave you earlier, when your bookkeeping is up to date, when you're keeping personal separate from business, it will help you find actual operational money leaks in your business. If there are inefficiencies in your time, if there's, if your team is underperforming, if your processes are complicated, you can use these tools to help you to find these things in your business so that you can make better decisions going forward. So we know cash flow is a little daunting sometimes, but we really like to try to implement really simple tools. And I'm going to go back to this small plate accounting. These are targets. It doesn't have to be exactly these targets for you, but the percentages can change as you grow. The percentages can be more or less what you need it to be. But when you use this to manage your cash, it really can just help you to keep things under control, as under control as possible, because we know things are crazy with business. Anything can happen. But when you try to keep things under control, when you understand what's happening with your money and where it's going, you can find these leaks and make better decisions for your business. So hopefully that's helpful. Does anybody have any questions?
I was just gonna add about like the 50% owner's pay. It's like, that's the ideal for there. But if as long as you know where your cash is going, if you're like, oh, I'm investing more this month in marketing, I didn't get the 50%. It's more of just knowing where's your money going and aim for the 50%. But as long if you know like this month, oh, I only took 25% because this, and this, that's fine. As long as you know the why.
Yeah.
As long as you know where your money's going, that's the gist of cash flow, is just knowing where's
Knowing
your
where
money
it's going.
going. It's coming in, and then where did it go?
And so another tool we want to offer to you is having CFO days. So be consistent with your CFO days. You can transfer your money, pay bills, just have these days to really understand your cash and know where things are going, what's happening. Because these days will help you to stay in the know. Not only stay in the know, but stay on top of the things that financial things that you have to do. So it'll help you with planning. It'll help you review maybe previous months or quarters. Just use this time to focus in on your money and understand what you need and what you need to do. Terry, you have a question? Oh, you're muted.
Muted.
Do that all the time. You suggested a frequency for the CFO days, but I didn't write it. I didn't catch it, what you said. How often should you do those?
You can choose, but I think a good amount of times is twice a month to do this.
Okay.
Because it really helps you catch, like, if you get paid on the first, you'll see a lot of revenue coming in. You'll be able to manage that. Some of your invoices, your expenses may come out toward the end of the month or in the middle. So having multiple days where you do this, taking a look at just your cash management. If you need to make transfers for your profit first strategy or small plate accounting strategy, this day will be the day where you do that. And so we recommend that. And we have a gift for you. So if you use this QR code, we will give you a little checklist that will help you through your CFO day and help you also to stay on top of your cash flow. And just knowing what to do on your CFO days is just going to help you to stay on top of things, which ultimately is the goal. Because we want you to know where your money's going, because we want you to make the best decisions possible for your business. Yeah, so any other questions? Anything you want to tag in, Eric?
Not particularly. I mean, if anyone is still confused about cash flows or like kind of what the idea is, please ask. But it really is the idea of it is just tracking your money. Like you get your profit, and then where's that profit go? That's kind of the gist of it. Oh, yeah, sorry.
Yeah, you get your revenue.
So can I ask a question about that, about something that just happened?
Sure.
I opened an eBay store, and then eBay and I quickly came to a parting of the ways over my using an overseas VA. So they are apparently not going to pay me the revenue that came in from the 10 customers who bought from me right away.
What?
I mean, fortunately, I know one of the senior people at eBay because I gave birth to her, and she will try to fix it for me. But so right now, eBay's holding on to this money because they looked at my account and thought, there's fraud going on here by somebody else, not by me. How do I pay attention? Where do I put that information into all of this, that I have $220 in? I paid for the products that went to my customers. I paid for them because I'm doing
But
print
you-
on, but it looks like I'm not going to get the revenue.
There usually is, this is where Evan comes into handy because you know the exact name of the account.
Okay.
But there's an account in the profit and loss statement that's like it's like lost goods, lost or damaged goods, or like Lauren, you know what I'm talking about, where it's like basically it's the kind of the equivalent of like if you sell product and the person they went out of business before they could pay you back. It's
Right.
like I'm trying to think of the word.
Yeah, Michelle, feel free to chime in on this if you know also.
Yeah, I forget there's a specific name for the account.
Yeah, that's
It's
okay. I mean,
it's basically a holding account, but it's like, well, one, is that legal to not give you your money that you made? I don't understand that part. So I do think
I'll
there
fight
needs to
with
be,
eBay, and I'll figure that out with eBay, but I may
yeah,
not get it. They're bigger than I am.
interesting.
And
But
I
typically
don't know.
when you're making something that you're going to sell, it's a cost of goods sold. But then again, when there is damage or some sort of weird situation, because did your client still get what they paid for?
Yeah, all the products shipped from Printify, which is who, makes the t-shirts and sends them out. So
So
that
you
they
basically,
got what they wanted. And I have money at Printify that they hold on to, or they take it out of my credit card, my
Mhm.
debit, to pay for the stuff that they're shipping. So they make the thing, I pay them, they send the thingy to my customer. But eBay, my customer paid eBay,
Okay.
right? And so eBay's got that money, and eBay holds for 12 days anything your customers pay.
But I'm
Before
assuming it's been longer than 12 days.
it's been shorter than 12 days, but they sent me an email saying we have closed your account because we think fraud. So I called my daughter because she's, the person who does this at eBay.
Hmm.
And she said she could try to get her team to look into it and all of that. But I just want to know, because it doesn't show up anywhere in my Relay account, because, well, the purchase.
Because you never got paid, yeah.
Right. I mean,
So it's kind of like you're expecting, like almost like you have an outstanding invoice forever. What is that? It's like you have a receivable.
Yeah, it's a
Um,
receivable.
Yeah,
and
there's an
then
account. I'm just trying to I can't
but
find the name
if
of
she
it.
never gets paid, it kind of has to be written off.
Yeah, it's at the end of the year. It goes against basically like, yeah, I'm trying to get, I couldn't find the name of it. But it's the idea is like if you have an account receivable, but the company that owes you money, like they go out of business, you're never
Right,
getting that money back for the product you sold to
Yeah.
them.
right.
It's like spillage or waste or something. I forget. It's something along those lines of like what it
Yeah.
falls
Well,
under.
name is, to me,
It's like
the
a
name is
write-off.
not that
Yeah.
Yeah.
important so much as just sort of understanding, but I guess,
Yeah,
Well,
it
under
just kind of
them
shows up as a
closing your
loss.
accounts, I don't know if they asked you to try to prove it or anything, but that's more of a legal
that's,
thing of making sure you get your, you
yeah, I
know.
mean, that's an eBay thing, and I'll figure that out. And like I said, my daughter's the person who's like the higher up in that, so she can answer that question. But I think they still may hold on to my money. Okay, I just was curious if there was a way to keep a record of that somewhere.
So
Like a
uh,
record of what you paid for those specific items that were never, that you're never going to receive the money for.
Well, yeah, I mean that, I guess it's sort of how do I reflect that? Because the only place that information rests right now is in my head.
well,
Mm,
that should be in your statement in regards to just like
expense.
yeah, like expenses, inventory you bought, the cost of goods sold.
Okay,
Yeah. So the money that you paid will be in your on your account. So we'll see that. Um, but I think it's a matter of saying you had money that you were supposed to receive from eBay. So that would be kind of like a receivable that you may or may not get. And then at some point it kind of gets written off into
Bad debt.
bad debt. Yeah.
okay,
Yeah,
all
so
right.
basically,
Which
yeah, so
sucks, but
it's
hopefully
like
you get it.
right now, if on your statement you have it in account receivables, like the 250 they owe you,
Mm-hmm.
um, once it's confirmed that you're never gonna get it, you would then take it out of the account receivable and put it into like a bad debt. So it doesn't show up on your revenue and it just
Got
kind
it.
of moves.
Yeah.
So it'll still be recorded,
All right, so
but
I need a
Right.
called bad debt at some point.
But
base
that is a direct example of how the income statement can get you messed up with your cash because when you put this as a receivable, like something you're supposed to receive, it's going to be counted as revenue, even though you have not yet received the cash for it, right? It's going to
Mm-hmm.
be revenue and accounts receivable, at least with accrual based accounting, but let me not get too technical. But it's going to say revenue, it's going to say account receivable, and then you have still not gotten this cash, but you're going to look more profitable, even though you haven't gotten the cash. So that's why it's so important to separate the two to say, I can't just go by profitability. I have to use profitability in addition to looking at my balance sheet, looking at my assets, making sure I understand like the debt that I'm paying, and then taking a look at that cash flow and understanding the in and outflows of your cash.
Got it. Thank
So
you.
yeah. Any other questions? Oh, hi. Look who decided to join us. Just kidding.
I would have to say that was a great conversation, Terry. So, because even though it's a small amount of money, how do you track it, right? And
Right.
a layperson wouldn't even know, like, where do I record this information? These people owe me money, and if I don't put it somewhere, I'm gonna forget about it. Yeah. But at the end of the day, if it turns out like you can't get the money, then you can write it off as a bad debt, which is a contra to your net profit, and you can use it as a deductible.
In a sense.
Great.
Yeah.
Thank
So
you.
So
great,
don't
great,
forget to talk to Evan about that though.
right.
Right. I'll make
Don't-
sure Evan knows.
Yeah, make sure Evan knows to set it up as a receivable. So we can keep an eye on it at the end of the year. We're gonna have a decision and we can either clear out that account or expect that those funds to come in at some point.
Okay. Thank you.
Awesome. Any other questions? No? Okay. Well, if you need help with any of this stuff, if you need help with your accounting, you can always book a call with Mitchell Consulting. We are here to allow you to have the right information and make the best decisions for your business. So make that call, and thank you guys for joining us. We will see you guys next month. So thanks for coming.
Thank you.
Until next time. Bye bye.